Hey, ever feel like your investment portfolio is a bit off-kilter? Like maybe some of your investments are doing great while others are lagging behind, and you're not quite sure how to bring everything back into harmony? If that sounds familiar, you're in the right place. Today, we're diving deep into a crucial aspect of investing, especially if you're using platforms like Acorns, rebalancing. Now, you might be thinking, rebalancing? Sounds complicated. And while the term itself might seem a bit technical, the underlying concept is actually quite straightforward and incredibly important for long-term investment success. Think of your investment portfolio as a carefully balanced recipe. You have different ingredients, stocks, bonds, maybe even real estate, each playing a specific role in the overall flavor and texture. But what happens when one ingredient starts to overpower the others? Maybe one type of stock has a fantastic run, making up a much larger portion of your portfolio than originally intended. Conversely, another asset class might underperform, shrinking its slice of the pie. This imbalance can actually introduce more risk into your portfolio than you might be comfortable with. Remember, diversification, spreading your investments across different asset classes, is a cornerstone of smart investing. It helps to cushion the blow when one area of the market hits a rough patch. When your portfolio drifts significantly from its target allocation, you're essentially undoing some of that diversification, potentially exposing yourself to greater volatility. That's where rebalancing comes in. It's the process of periodically adjusting your portfolio to bring it back in line with your original target asset allocation. Think of it as the chef stepping in to restore the balance of ingredients in our recipe, ensuring the final dish is exactly as intended. Now, let's zoom in on how Acorns handles this crucial process. Acorns is a popular micro-investing platform that automatically invests your spare change and offers various portfolio options based on your risk tolerance and financial goals. One of the key features that makes Acorns so hands-off and appealing is its automated rebalancing strategy. So, how does Acorns actually rebalance your portfolio? Well, the specifics of their algorithm aren't publicly disclosed in intricate detail. That's part of their secret sauce. However, we can understand the general principles and how they likely operate. Acorns monitors your portfolio on an ongoing basis, comparing its current asset allocation to your target allocation. Your target allocation is determined by the portfolio you've chosen, whether it's conservative, moderate, or aggressive. Each of these portfolios has a specific mix of different exchange-traded funds, ETFs, that represent various asset classes, such as large-cap stocks, small-cap stocks, international stocks, and bonds. When Acorns detects that your portfolio has drifted beyond a certain threshold from its target allocation, it will automatically take steps to bring it back into balance. This typically involves selling some of the assets that are overweight and buying more of the assets that are underweight. Let's illustrate with a simple example. Imagine you're in a moderate Acorns portfolio with a target allocation of 60% stocks and 40% bonds. Over time, the stock market might perform exceptionally well, and your portfolio might drift to 70% stocks and 30% bonds. This means you now have a larger exposure to the potentially higher volatility of the stock market than you initially intended. Acorns' rebalancing mechanism would likely identify this drift. To bring your portfolio back to the 60/40 target, it would automatically sell a portion of your stock holdings and use those proceeds to buy more bonds. This action reduces your exposure to stocks and increases your bond holdings, effectively restoring the desired balance. Similarly, if bonds outperform stocks and your portfolio shifts to, say, 50% stocks and 50% bonds, Acorns would do the opposite, sell some bonds and buy more stocks. The key here is that this entire process is typically automated. You, as the user, don't usually need to manually initiate these trades. Acorns handles the monitoring and the adjustments behind the scenes, making it a truly hands-off approach to maintaining a balanced portfolio. Now, you might be wondering about the frequency of Acorns rebalancing. While they don't explicitly state a fixed schedule, like rebalancing every quarter or every year, it's generally understood that their system is triggered based on the degree of deviation from your target allocation. This is often referred to as threshold-based rebalancing. Threshold-based rebalancing can be more efficient than time-based rebalancing. Instead of rebalancing on a set schedule regardless of market movements, Acorns' system likely only acts when the imbalance becomes significant enough to warrant intervention. This can help to minimize unnecessary trading and potential tax implications, as selling investments can sometimes trigger taxable events in non-tax-advantaged accounts. Think of it like this: if our recipe only has a tiny bit too much salt, the chef might not need to make a big adjustment. But if the saltiness becomes overwhelming, then action is definitely needed. Similarly, Acorns likely has preset thresholds for how much your portfolio allocation can deviate before it triggers a rebalancing trade. Another important aspect to consider is that Acorns typically rebalances using fractional shares. Because they allow you to invest small amounts of money, they often deal with fractions of shares of ETFs. When rebalancing, they can buy or sell fractional shares to precisely adjust your portfolio allocation without needing to trade whole shares. This ensures that even with small account balances, your portfolio can be effectively rebalanced. It's also worth noting that rebalancing isn't about trying to time the market or predict which asset class will perform best in the future. Instead, it's a disciplined strategy to maintain your desired level of risk and diversification over the long term. By selling some of your best-performing assets and buying some of your underperforming ones, you're essentially selling high and buying low, a fundamental principle of sound investing. However, it's crucial to understand that rebalancing doesn't guarantee higher returns. Market conditions play a significant role in investment performance. The primary goal of rebalancing is to manage risk and ensure your portfolio aligns with your long-term financial goals and risk tolerance. So, why is Acorns' rebalancing strategy so beneficial? Firstly, it's automatic and hands-off. You don't need to constantly monitor your portfolio and make manual adjustments. Acorns takes care of it for you, saving you time and effort. Secondly, it helps to maintain your desired risk level. As your portfolio grows and market conditions change, your initial risk profile might drift. Rebalancing helps to keep you aligned with the level of risk you're comfortable with. Thirdly, it enforces a disciplined investment approach. It prevents you from getting carried away by the recent performance of a particular asset class and potentially becoming overexposed to it. Fourthly, it can potentially lead to better long-term returns by encouraging you to sell high and buy low, even though that's not its primary objective. With that said, thanks for watching, and until next time.